As the two-week war in Iran extends into its third month, the coverage of this issue, at least so far as the economics go, has been primarily focused on the impact this is having on the rest of the world. Global oil prices, global trade, the impact on supply chains, food production, energy security in Europe, the military budget of the USA, the future of regional hubs like Dubai that sold themselves on being the safest cities in the world, and the future of the petrodollar underpinning global finances. But there is another variable that has been largely overlooked, and that is the economic resilience of Iran itself and how long it can truly afford to keep this fired up. There is the common talking point that Iran is holding the global economy hostage with drones that cost $20,000 but require $500,000 interceptors to shoot down. And as far as economic trade-offs go, that should clearly be in their favor. These little anecdotes also play into the wider assumption about how this conflict is playing out, which is that it's hurting all of the parties involved. But so long as Iran can cost the world more than its adversaries can cost it, well then they hold all the cards at the negotiating table. But one potential flaw in that assumption is Iran was not and is not a healthy economy. Even before this conflict started, it was facing extremely high levels of inflation, widespread poverty, frequent power outages, endemic corruption in business and government, youth unemployment of over 20%, stagnant economic growth, capital flight, and brain drain, all fueled by a misallocation of resources towards a large military and an overdependence on fossil fuels. In one of the most oil-rich countries in the world, more than a third of the population lives on less than $9 a day, even after adjustments for purchasing power parity. And more than half of the population is now considered malnourished. And that's according to their own Ministry of Social Welfare. Even with all of that fossil fuel energy, they were struggling to reliably keep the lights on in their capital city. The one silver lining is that Iran is a pro-state that has somehow avoided Dutch disease, but it only did that because it has been so heavily sanctioned. All of this is to say that if this conflict really does boil down to the global geopolitical equivalent of punch for a punch, then Iran might have its hands around the world's windpipe. But it is still ultimately an anemic and malnourished combatant. Even before the direct and indirect cost borne by this war, Iran and its people were struggling, which might reasonably suggest that they are ultimately on a timer before their already stressed institutions collapse completely. And this is before even mentioning the breakdown of OPEC and what it may mean for the country's one financial lifeline. But unfortunately, another variable that should be considered is that the economic systems that support the people of Iran and the economic systems that support the military of Iran don't have nearly as much overlap as they do in most other economies. Despite being one of the most energy-abundant countries in the world, it has been suffering from an ongoing energy crisis. The grid is old, underinvested, and patched together with whatever components have managed to slip through the sanctions net. Power stations run on natural gas that the country also tries to export. So in winter, when domestic heating demand spikes, exports get cut and the lights go out. Has had rolling blackouts for years now, even in the middle of summer. Even though the country is sitting on the second largest natural gas reserves on the planet, water is the same kind of paradox. Iran is not a particularly dry country by Middle Eastern standards, but decades of poor agricultural policy, inefficient irrigation, and over-extraction from aquifers have produced a genuine water crisis. Major rivers and lakes have been visibly drying up, farmland is being abandoned, and several of Iran's biggest cities are now dealing with serious shortages on top of the power cuts. Broadly speaking, this is what happens when an economy stops investing in basic infrastructure. Extractive corruption gets even more direct than that. The former supreme leader, for instance, sat on top of an organization called SATARD that, according to a 6-month Reuters investigation, controlled assets worth around $95 billion, made up of roughly $52 billion in real estate and $43 billion in corporate holdings. Much of it built by seizing the properties of ordinary Iranians, religious minorities, immigrants, and political opponents over decades. That figure is particularly impressive or depressing when you remember that Iran is not exactly the home of high-priced real estate. It's not like Australia, where $95 billion worth of property gets you a 2-bedroom duplex with a fixer up a bathroom. In Iran, these seizures had to be pretty vast to add up to that. Now, these resources weren't just seized to fund a lavish lifestyle for senior leadership, although that may have been preferable. A lot of the money is redirected towards shadow funding a very large military for an economy of this size, as well as the famously controversial nuclear program that the rest of the world does not want them to have. The official line is that this is for domestic energy production, but even from a purely economic perspective, that doesn't really hold up. Iran is one of the most energy-rich countries in the world anyway, and even if they did finish a nuclear power plant, their grid is already falling apart, leading to those frequent blackouts. So the only other logical explanation is that they are big-time environmentalists, really trying to cut down on their carbon emissions. Military spending is officially only around 2% of GDP. But again, this is where opaque economic metrics become a real problem. In reality, their total military spending is far higher than this, with some estimates reaching as high as 10% of GDP. That money is routed through both the regular military and the much better funded Revolutionary Guard, all to say nothing of the money they spend on other people's militaries. A lot of Iran's money is used not only to fund its own military development, but also to bankroll the military operations of foreign groups across the region. Iran has financed several conflicts around the Gulf and pays a significant share of Hezbollah's costs. Reports indicate that the average soldier in Hezbollah is paid more than 10 times as much as the average soldier in the regular Lebanese army. These payments to fund foreign conflicts have made Iran even more of a pariah on the world stage. On top of taking funding away from people at home who desperately need it, and on top of all of that, food security and water security have been deteriorating for years, with the state spending more and more on weapons and proxies while the basics get harder to come by. So that was Iran on the eve of the war, sanctioned, mismanaged, energy-rich, and energy-short at the same time, with a population already running out of patience. And then the fighting started in late February of this year. After months of escalating tension and another round of nuclear inspections breaking down, the USA and Israel carried out targeted strikes on a number of Iran's underground nuclear facilities that kicked off the conflict that we are now in the third month of, despite it being widely advertised as a two-week or two-day affair, depending on who was being asked and when. Almost immediately, sanctions were tightened even further with secondary measures aimed at making it nearly impossible for any non-Chinese buyer to keep purchasing Iranian crude. Retaliatory strikes went back and forth from there, with infrastructure on both sides taking damage. But the Iranian side absorbing the bulk of the hits to refineries, power stations, and government buildings. The financial response was about what you would expect. The Iranian Rial, which had been sliding for years, collapsed almost completely. As of late April, it is trading at around 1.66 million Rial to the US dollar on the free market, which by most measures makes it the single least valuable currency on the planet. To put that in perspective, when the current central bank governor took office in late 2022, the Rial was trading at around 430,000 to the dollar. So it has lost roughly 3/4 of its value in just over 3 years. A currency that is collapsing on this scale doesn't just look bad on a chart. It kicks off extreme inflation for regular people on the ground. Official annual inflation was already running at around 44% earlier in the year, and point-to-point inflation through the first weeks of the conflict ran above 60%, which means the prices of imported goods, fuel, and basic staples have been rising not by the year, but by the week. That kind of price acceleration is what economists call inflation expectations becoming unanchored, which is a polite way of saying that nobody trusts the currency to hold its value long enough to even bother saving in it. This in turn has produced a second round of mass protests. These were initially motivated by the same living conditions that had been getting worse for years, made suddenly intolerable by the fact that the state was visibly spending what little hard currency it had on domestic and foreign military operations rather than food, water, or fuel. Without straying too far from the economics, these demonstrations have been suppressed to a frankly horrifying degree, which was a major part of the justification used by the USA and Israel for the latest round of strikes. As the conflict drags on, more infrastructure has been destroyed, more sanctions have been layered on, and Iran's neighbors are getting visibly fed up with the situation. Nobody in the Gulf can reliably get their oil out through the Strait of Hormuz right now, which is undermining the livelihoods of several much larger players, as well as wrecking their longer-term attempts to diversify their economies through tourism and international business. This is also a big part, although not the only part, of why the United Arab Emirates announced this month that it is leaving OPEC effective May 1st. Officially, the UAE has been wanting more freedom to expand production for years, with an explicit goal of hitting 5 million barrels per day of capacity by 2027. And OPEC quotas had been getting in the way of that ambition. But the timing is not subtle. The exit comes after weeks of Iranian missile and drone attacks on UAE territory, and after months of OPEC's Gulf members watching their tanker traffic get stuck behind a strait that one fellow OPEC member has effectively shut down, which means OPEC, the organization that has held the global oil price together for half a century, is now openly fragmenting because of a war fought by one of its own founding members. For Iran, that matters in a very specific way. Iran is making some money by acting as a toll collector through the Strait of Hormuz, which it has now closed off to most commercial traffic. That income, at least in theory, could be used to fund the kind of asymmetric conflict it has built its entire military doctrine around. Cheap drones, cheap missiles, mining vessels, and the implicit threat of doing more of the same. All other things being equal, this is a fight that should suit Iran's balance sheet much better than it suits the balance sheets of the countries trying to keep shipping lanes open. They also have large stockpiles of military equipment that they can keep drawing on. But stockpiles are by definition finite, and most of the production capacity to replace them is sitting in the same heavily sanctioned, sporadically electrified industrial base that has been struggling for years. The real problem is that the economic systems that support the Iranian people and the economic systems that support the Iranian military are not the same system, which means that even if the military can keep finding the resources to keep firing drones for another year or two, the civilian economy is going to run out of food, water, fuel, and patience long before that point. This is the unfortunate result of an economy that puts a disproportionate amount of its limited resources into its military. It is much more likely to run out of the basics for ordinary people before it runs out of drones to lob at ships trying to make a run through the Strait. So, while on a pure balance sheet basis, Iran might be able to keep the fight up and cost the world more than the world is costing it. Even from a fairly cold-hearted economist perspective, it would be a real stretch to call this any kind of victory. The currency is the weakest in the world. Inflation is running at rates that wipe out savings inside of a year. The grid is unreliable. The water table is dropping. Half the population, by their own government's measure, is malnourished. And the regional cartel that gave the country its one form of global economic relevance is now actively breaking up around them. In that kind of state, a regime can probably keep launching drones for a while longer. The harder problem is that it also has to keep feeding, watering, and supplying electricity to the population. Doing the launching, and the room to do both of those things at once is shrinking by the month, which is the real reason this conflict is on a timer. And the timer is not running on the side of the Islamic Republic.